U.S. nat gas futures are continuing their downward trend, facing significant pressure due to declining weather-related demand. The market began the week by falling below key technical support levels, intensifying the bearish outlook. This drop in demand, alongside a lack of supportive factors, has amplified the downward momentum, pushing prices even lower as traders become increasingly pessimistic about near-term outcomes. As the market faces ongoing challenges, the potential for a sustained recovery remains uncertain, with bearish forces prevailing. Gas prices continue to decline, despite forecasts indicating that national demand will remain elevated to very high over the next 6 days, before tapering off to moderate high during the 7 to 15-day range. The southern two-thirds of the U.S. will experience very warm to hot temperatures, while cooler conditions are expected in the northern areas, with highs in the upper 60s to 80s, leading to an overall decrease in demand. Energy analysts also pointed out that the significant oversupply of gas and storage has kept prices suppressed throughout the year. Even though weekly storage increases, including a rare decline during 1 week in August, have been smaller than usual in 13 of the past 14 weeks, there was still about 12% more gas in storage than is typical for this time of year. This price drop occurred despite predictions of hotter than normal weather over the next 2 weeks, which should prompt power generators to use more gas to keep air conditioners running into mid-September. Meanwhile, European gas prices increased on Tuesday afternoon due to supply concerns stemming from an extended outage at an Australian LNG plant and geopolitical risks, although strong storage levels are capping the upside potential. Train 2 at Ichthys LNG is expected to be back online in October after being halted on August 20, marking the second train outage in the past month. European gas prices often follow Asian LNG prices higher due to the competition between Europe and Asia for LNG. The market is closely monitoring peace talks in Gaza in the Ukraine-Russia conflict. Escalations have continued in the Middle East and on the Ukraine-Russia border in recent days, maintaining a level of nervousness in energy markets. The near-term risk of broader conflict in the Middle East has lessened somewhat after Israel and Lebanon's Hezbollah exchanged fire without further escalation, but Iran remains a significant threat as it considers a strike on Israel, according to America's top general on Monday. Russia launched several waves of missile and drone attacks targeting multiple Ukrainian regions early on Tuesday, following Moscow's largest air assault of the war on its neighbor the day before. Natural gas tests new lows as pullback continues amid a lack of positive catalysts. Should nat gas close below the $2 mark, it will likely target the next support level at $1.95, followed by the main support at $1.90. However, I believe the market is in a phase where it's trying to establish a bottom. Any short-term breaches below the $2 support are likely to present buying opportunities for traders focused on value. Looking ahead, any catalyst, such as an additional production cut, could quickly push prices above the $2.10 threshold, with a gradual rise toward $3 ahead of the high-demand season, similar to the scenario seen in May. Please like, subscribe, and comment to support the channel. See you in the next one.